Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that for the most part, ES held above the 04 quarter support, and at this point, it's attempting to put in a breakdown below that area, but that can simply turn into a false breakdown attempt. We still have support at 2098 to 2100 and 95 to 96, and as long as ES is holding above those areas, there's still potential for buyers to step in and turn things around. We're going to be using 04 quarter to 06 quarter as the micro bull bear zone to establish very short-term directional bias. So off the open, if we're holding below 04 quarter, then we know that there's potential for ES to go down and fill the gap and tag that naked VPOC at 2101 half and possibly test the initial support zone at 98 to 2100. Now buyers can be active at initial support and off of that naked VPOC open gap area. And from there, if we can get back above 04 quarter to 06 quarter, then that would indicate that the buy side is still maintaining control and there's still potential to go back up towards the 09 quarter previous close and the 11 to 12 half initial resistance zone, which is the main inflection point on the upside. So on the upside, if we break out above 12 half, then that would be a breakout from the balance from yesterday as well as the overnight balance. So at that point, we can get some follow through, test the previous day's high at 21.15, and most likely the resistance zone at 16.5 to 18.5 with potential to even test the all-time high. So at that point, the buy side would be in firm control, but we're just taking it step by step. So on the downside, 98 to 2100 is an important inflection point. 95 to 96 is a key area, and if we start breaking below the 95-96, then at that point the market would be short-term bearish. It would be a confirmation that the sellers are a bit more dominant. Below that, we have support at 91.50, and finally 87 quarter, 89 quarter is a very key support zone as well for the larger time frames. And that's why if we break below 87 quarter to 89 quarter, that could actually accelerate the downside selling and bring the 78 half to 80 half zone into play. So we're just going to have to take it step by step to see, is there enough volume in the market to really justify a big move one way or the other. So far, we are running on slightly better volume than yesterday, but it's still below average. So we'll have to see off the open whether we start seeing a rise in the relative volume. And if we do, then we know that perhaps we can get some, slightly bigger range, get some directional movement. Otherwise, it can still be more of a balanced market where pullbacks into support simply attract responsive buyers, and from there ES simply turns back up and goes back up towards the 09 quarter and 11 to 12 half initial resistance zone, which would be the primary upside objective in the event of a strong rejection at 98 to 2100 and 95 to 96. And of course, right off the open, depending on which way ES is trading in relation to the 04 quarter to 06 quarter, will help us establish that short-term bias. Now looking at these other markets, NQ and TF, we know that they have been relatively weak compared to the S&P, but they are still simply balancing within a range. They haven't really broken below any really major support yet. On the downside in NQ, we have some pretty decent support in the 44.30 to 44.40 range, and in the Russell we have support at 12.21, followed by some decent support around the 12.15 to 12.17 area. And if these other markets start taking those support zones out, then again, it could turn into a day where we start getting some aggressive selling. But so far, the markets are simply balancing within a range, and we know that the buyers have been very active and dominant on the larger time frames. So especially in the ES being the stronger market, I think we just have to be a bit more cautious on the short side until we have some clarity on downside momentum and downside directional conviction. So for example, if we open and the advanced decline line is just extremely bearish, below minus 1600, then that could lead to a move down towards 95, 96, maybe even lower. But given the fact that we've recovered a lot of the recent sell-offs, the buyers have been dominant, you still have to be a bit careful on the execution side when you're shorting the market. And on the long side, just location alone can be sufficient especially if the other markets are also slamming into short-term support. If nothing else, you can still get some rotations off the support zones. So, mainly today we'll be watching to see whether the buyers can hold the 2101.5 gap naked VPOC area, initial support 98 to 2100. If this market is still strong, then ideally we don't break initial support, but 95 to 96 is still an area where the buy side can still step in, and we can still get a reversal back up towards 09 quarter and 11 to 12 half. And then, on the micro bull bear zone, if we continue holding above it, then this little poke below that area may just end up being a false breakdown. That's something we'll have to gauge off the open as well. So those are the main ideas. Let's see how the market behaves today, if the buyers can still maintain control, and we'll take it from there.